Guys, this is Arunshman Rao and welcome back to another video. Hope you all are doing really well. And this video is gonna be about mostly focusing on how to stay cash during no trading days. So basically, no trading days. It doesn't mean that weekend closings and stuff like that when the markets are closed. It's basically no trading days means suppose you are following a setup. If you are a trader, then you will be following a setup. And you are just not randomly gambling. And there are some days our setup is not formed, and those are basically non-trading no trading days actually, when our setup, the things which we want and the things which we see in the market, the things which are the reason behind our entries, those reasons don't form basically in the market. So these are the days which you can consider as no trading days. So basically, how to stay cash in those days. And staying cash means just protecting our capital in those during those days, and basically focusing on rather than losing, it's better not to trade in those days, to stay cash and to preserve the capital, because the only and main thing we have in trading is the capital. So we have to protect it at any cost. So basically, before jumping into it, let's jump into the charts, and let me show before even jumping into the charts, let me show you in which account I am trading, by the way. So this is the funded next account in which I am trading, $15,000 account. So basically, initial balance is $15,000, and if you will see the trading overview, so in the trading overview, we started trading at February 2. We pretty much we are still in phase 1, and we were pretty much up, I think 3.65% in this account. Then we came down 15,194, and today there was a no trading day, no trades, no executions, and the same capital and same equity and same balance. So basically, now we will be jumping into the charts and see what happened in the next 2 days, in the last 2 days. So basically, what happened is, so this is a missed trade. So basically, it was a missed trade. I think on today is 6th February. So 5th February was a no trading day, and I am making the video for 5th February, especially dedicating to 5th February. But analysis, if you will see the analysis, and analysis of I guess 4th and 3rd February. So this is the analysis. So basically, in the gold chart, I pretty much got stopped out in this trade. So this is where I lost all the $500 which I made, all the 3.65% which I was which I made. So basically, this was the trade, and this was pretty much a fake out. Just hit the SL, and my lot size was also my SL was also fixed in that direction, in that place, that I have to if the trade goes against me, I would have lost about $500. So basically, I lost pretty much everything which I made in the first day itself. And let me show you the trading history for full transparency purposes. And if you will see the trading history, so this is the trade. This trade over here, this trade over here is this trade over here, minus $549. So this is basically got stopped out and stuff. And this trade of profit $247, which okay, we are still in plus, but the thing is, this was the trade in GBP, and it was pretty much, basically, you can say it was a news trade, because this I forgot. This is not an excuse, actually. This is actually the true thing, that I actually forgot that yesterday there was a news, not yesterday, on 4th February. On 4th February, there was a news This was on 4th February. Yeah, this was on 4th February. So there was a news, as you can see, on 4th February there was a job openings news, and the news was negative, pretty much negative. And if we see the, you know, the 8:30 candle, where is that 8:30 candle? Okay, so basically the trade was in USD JPY. Sorry, yeah, it was the trade over here. Yeah, so in this trade, um, this trade over here was this trade of $247 profit. So basically this trade was something, as you can see, the trade was extremely good, but we early exited, and it was a 1.2 hour trade. If we would have held to this trade, would have made much more, and we in fact we would have covered up all our losses, and we will be, would have cleared our account. This is what new traders think. But as an, as someone who had traded for almost over 1 year, and mostly after making so many losses, it's okay, we are still in plus. You always have to catch the positive side of your, you know things which you perform in the market, and basically you have to work upon your negative sides which you think you can improve. And there is nothing to improve, you just have to stop doing it. That's it. you know if you are facing losses in the market, it means you are doing something extra that shouldn't be done. And the only way you can control, and the only way you can improve yourself, and the only way you can, improve your financial gains in the market, is to not do something that you are doing, unnecessarily. It may be over trading, it may be revenge trading, it may be oversizing, anything you can name it. And it may be, regret of, as you can see, this is one of the, new traders will think, okay, after, suppose I am a new trader, for example, if I would have captured this trade and I would have exited at the same point which here. But what a new trader thinks is that, oh my god, the market had fell way more. If I would have held it, and just held it through the way, I would have made almost, a 4-5 hour trade. It was amazing, it should have been an amazing trade. But the thing is, that's not true, my friend. I you know you should have an edge. Like, my edge was here, something like, there was volume in the market, and we got a break and close below this support zone over here. And I was just trying to, I was just anticipating for the price to fill this wick up till here. As you can see, my entry exit point was also, my TP was also here. Even not here, it was just here, because somewhere I was reaching to my trading window exit. Like, I trade between 12:30 p.m. to 8:30 p.m. So this is an 8:30 candle. So basically I wasn't confident, I will not say that, but it was something out of my trading window, so I wasn't comfortable. But I have to take the risk, because it was an opportunity, and it paid off. But I don't have any regrets. As an experienced trader of, even 1 years or 1.5 years, I don't have any regrets that I missed this whole sexy move over here. you know would have, held and made up, something about, as you can see, the entry was so good. If you consider the entry was so good, that would have made about 18 hour trade, man. Would have made 18-hour trade. But do you have the patience? Does your edge tell you to wait this long? Does your edge, you know, does your edge tell you to completely exit at this point only? You have to think that. You have to question yourself that, basically, every time, before you think that I missed a big move. What your edge tells is what you have to follow. So basically, this is what my edge told me, this is what my setup told me, this is what I have made over the past you know 6 months or past 8 months, and I have been following strictly. This is what everything told me, and I went through that, and still I don't have any regrets because I am still in plus. So this is what makes the difference between newbies, noobs, or and professionals. In the end, you have to be positive. You have to be profitable, not plus 100%, plus 200%. No, that's not necessary. You have to be in the end in the plus. It doesn't matter. Means it's still the same thing that you are plus 100%. Then on the other day you are minus 500%, which it doesn't make any sense, bro. It doesn't make any sense. Means you are making $100, and on the second day you are making $300, but on the third day you are losing $500, which is absolutely bullshit. It doesn't work like that. So basically, um, what I was saying is, yeah. So how to handle a no trading day and how to stay cash during no trading day. So basically, what we will see, in mostly I will be analyzing this GBP chart, and I was anticipating for the price to break and close above this resistance, and I was anticipating for the price to break and close above this resistance, and after this I would have executed an order to anticipate for the price to push up and cover this whole clean range of 68 pips. But that didn't happen. It happened the opposite. But also I was anticipating for the price to break and close above this zone over here, which it didn't. And why I am saying which it didn't, because this is a whole news candle, you can say. This is a whole big candle, and I wouldn't have traded even if the candle has formed and broke and close above this, because I was anticipating to break and close above this, not this, because I was anticipating for the price to cover up this clean range over here, and with the closing it covered almost 70% of the move, 70% of the clean range. So why would I be executing the orders for this, what you will say, this 30% range which is available. Okay, for instance, we will consider I have executed the order. Where will I put my stop loss? Over here, which is the, if you will see the risk to reward ratio, it doesn't make any sense. It doesn't make any sense. Okay, if I would have placed my order here and stop loss here, and I am anticipating for the price for the week fill, as you can see, the risk to reward ratio is below 1%. Sorry, pardon me. So the risk to reward, as you can see here, is 0.5, which is below 1. It doesn't make any sense. So this is what a no trading day is. I have waited all along this consolidation to break, and something I wanted, a closing above resistance or a closing below support to enter into the trade, but it didn't happen as the way I anticipated. So today, basically, it was a no trading day. I knew it, and I didn't execute it. Beforehand, what used to happen was, I know it is not a trading day, and I know that market is not giving me moves, and market is not behaving like what I am anticipating. But still, then I used to execute some kind of orders, which you can say force trading, and that is one of the very, very, very biggest mistakes newbie makes, or the beginner makes. So it doesn't work like that. It's basically you are going against your edge, and going against your edge means there is a 85-83% probability that you are going to lose, because if you have made an edge, it would have some kind of win rate, it would have some kind of accuracy, and if you didn't measure the accuracy, you haven't tested out your edge yet. So I would recommend you to backtest the edge over and over again, over and over again, and over and over again, to find out the accuracy what your edge has. And after that, to, after you get the accuracy, basically the accuracy has to be something around 50% at least, because randomly if you press buy and sell button, randomly if you press buy and sell button, it's still 50-50. And if you are making an edge, it should have something, you know above probability, above 50%, because randomly buying and selling still has a 50-50 probability of winning and losing. And making an edge in the market has to be something above that. you know it has to, it your, if your edge has below 50% win rate, you are, that's not an edge, that's just time wasting. You have at least 51% as an edge to, at least 51% of your win rate. Means out of 100, it means out of, you, let's say, suppose if you take 100 trades, out of 100 trades, if you know if you have taken 100 trades with full discipline, by completing, like while completely following your edge, you would have, means at least you should win 51 trades. Because if you would have traded with randomly buying and selling, just clicking buttons without any edge, you're just gambling, it still has 50% probability that of winning and losing. So basically it has, suppose, 100 trades, and you are intelligent, bro. If you are watching this, you are intelligent and you know that, suppose you are taking 100 trades and you are randomly buying and selling, so there is a probability that 50% of the traders, 50 trades will be losing ones, and 50 trades will be the winning ones. Who knows? But as an edge, if you develop an edge in the market, it has to be something around at least 51% of winning rate. So if you have a more winning rate, then suppose, let me tell you this interesting thing. If you have more winning rate in your edge, then there is less likely you will be facing a losing streak. And let me show you this thing over here, this interesting thing over here. So this is the thing over here, as you can see. So win rate 30%, loss rate is basically 70%. If your win rate is 30%, your loss rate is 70%. So one loss, 70% chances. Two losses, suppose you take a first trade and that is 70%. You basically, this table is, just understand it, bro. Like, I'm just trying to make a thing over here. So basically, suppose your win rate has, your edge has a win rate of 30% and loss rate. So basically, obviously, your loss rate will be 70%. So first trade you take is having the probability 70% that it will be a losing trade, because the loss rate is 70%. And on the second trade, the probability decreases, and the two losses back to back are probability, there are 49% probability that will be that two trades consecutively will be losing trades, and there are 34.3% probability that you will be getting a three losing streak, and there are 24.01% probability that you will be getting a four losing streak. And this, as you can see, the the table goes on. It's when your win rate is 30%, but as it increases, suppose we will see 70% win rate. So suppose 70% win rate and 30% loss rate. So first trade you place, it will be a loser trade. The first trade will be a loser trade, and that is basically 30% probability. But there are 70% chances it will be a winning trade. Back to back two losses, there are 9% chances of having that, but 91% of, on the second trade you will be winning, there are 91% chances. On the third trade, 3 back-to-back losing trades, there are 2.7% chances of having that, 3 losing trade back-to-back consecutively as a as a losing streak of 3 trades. 2.7% chances of having that scenario if your win rate is 70%, but 2.7%, the third trade will be a losing trade. There are, it's still 97 point something. You have the 97 point something percentage will be, it will be a winning trade. The third trade will be a winning trade after, have lost one first trade and second trade. So basically the third trade 90. So basically, the losing streak, the main propaganda of, the main thing which I'm trying to tell you guys is, as big your win rate is, the more likely you will be facing a losing streak. The less likely you will be facing a losing streak. That's the thing which I'm trying to tell you. So yeah, this video was all about how to stay cash, how to, how a bigger win rate helps you. Actually, people say that win rate doesn't matter, but win rate matters, because why you are making, everybody has to trade with an edge, and if you make an edge to get accuracy in the markets. And if it's just basically, you're working for money and saying money is not everything. It's basically bullshit, bro. Why you are why you are then developing an edge to basically get the accuracy, to get the desired accuracy, not the desired accuracy, but to get some accuracy, to, besides gambling, randomly just buying and selling on some stupid positions. It's better to, wait and follow a system of entries and exits, and to, properly trade during sessions. That is what an edge. That is what an edge. You just develop, you just make your own rules and, follow them. So this is what this video was all about. So I hope you liked it, and I hope you enjoyed it. And this was all for the video. This side Anshuman Ralo signing off. Peace out.